Now, looking at some of the numbers that are making headlines, we saw the Kenya shilling weakening yesterday to about 85.0020, and this was weaker compared to Wednesday's close of 84.8595. Of course, on that day, we saw the central bank intervening, but they stayed out yesterday. We will be keeping a keen eye on that in terms of how the central bank is likely to intervene today. Crossing over to the Nairobi Securities Exchange, we saw the main share index closing 3 points shy of the 5,000 mark and stood at 4,996.07 points, which was a marginal increase of 0.2%. And crossing over to the all-share index, it was up 0.2% to stand at 126.72 points. With us in studio is Timothy Abwaga, a research analyst with Janges Capital. Many thanks for joining us.
Thank you for having me.
We saw Barclays Bank results coming in yesterday. It was one of these stocks that was really trading high in the bourse yesterday. And we saw their quarter-on-quarter performance increasing about 3.8%. And that's the highest we've seen for Barclays since the third quarter of 2011. What were your thoughts on the numbers?
I think the numbers are just a reflection of the good interest rate environment that the banking sector has been experiencing for this year. So going forward, we do expect Barclays to continue showing strong performance in terms of this sector. In terms of the growth that we expected, I still think it underperformed compared to its peers, because recently we saw Equity and KCB, and they registered growths of about 20%. So I still think Barclays is lagging behind, and definitely they need to do something about it.
What do they need to do about it? Maybe you can offer some advice.
Well, I think they could perhaps look for new avenues of increasing their revenue income other than the cost cutting. We've been seeing the cost cutting start from all the way from 2010 up to this year. Perhaps maybe it's starting to pay off, but they need to look for other ways, because they can only cut so much. Maybe start looking at new models of banking. Maybe adopt the Equity and a KCB model of agency banking. They need to counter that. Otherwise, they'll be in a very tight spot going forward into the future.
You've mentioned two things that I want to follow up on. The staff cost. They had an exceptional item, which was about 658 on the staff cost issue, which actually dropped their profits by about 17% year on year. And this is the third time they're actually cutting staff. They're laying off staff. In 2010, they laid off staff. In 2011, they laid off staff. And between those 2 years, it came to about 1,000 employees. And this time around, they've done it again. For you, how is the staff cost evolution?
Well, what we're seeing with the statements, the employee cost is coming down, but it's not really impacting on their operating expenses. Operating expenses seem to be still relatively stable, just maybe moving marginally by about 3%. Which when you cut about 1,000 employees from a firm, you would expect some considerable amount of decrease in terms of the operating expenses. But we're not seeing this. So I think based on the staff costs that they have had, we would expect them to now start looking for other avenues, maybe more innovative products, challenge KCB and Equity, because 5 years back they were at the top, and now they're nowhere. So we would expect
I hope Barclays is listening to you and also taking notes, but also looking at the whole issue of their performance relative to the market. Barclays Bank is a conservative bank, and this is a fact that is quite known in the market. Are you saying it's a time that they need to shed off that conservative nature and go out into the market aggressively?
Well, I do think so, given the financial muscle from the parent company, consolidation of the operations with Absa Group in the whole of Africa. I do think that they should now focus on being more aggressive in terms of the market segment that they concentrate on. So they do concentrate a lot on high-end clientele and corporate segment, which also forms a very big part of the income. So we would expect them to start going more aggressive, because KCB and Equity are starting to eat into this market share. So we'd like to see the bank evolve more and come up with new products, especially for their retail clients, that will enable them to defend this market share and also increase market share in other areas.
So it's more you snooze, you lose. Are they coming a little bit too late into the party if they change the strategy now?
Well, You could say so, but I think given the resources, I think playing catch up to them wouldn't be such a hard thing. We would expect that maybe in 1 year or 2 years they could have, made up ground and be at the level of equity in KCB, and we can start seeing the turnaround, coming back to good profitability.
Looking at the share price, it has been rallying ahead of the results this week. We saw it touching a high of almost 18 to 90. Do you see investors, are they likely to be happy with the numbers? Are they likely to punish the stock? Or what are the sentiments on the ground with regards to the performance?
Well, I think investors probably might punish the stock, given it's currently trading at a PE of around 11.34, which is almost the same as it stands at. 11.3 is slightly above the industry, which shows that the stock probably is a good growth stock with good growth prospects, but now the numbers just seem to cancel that out. So we do expect probably the stock might go down. It might come under pressure, some selling pressure for today, but going forward, we would say going back to its original levels of between the 17.5 range.
Okay, looking at CMC, which also announced the results, and they had a 59% drop in the first half. And of course, this is a company that has been involved in a lot of boardroom wrangles. They've lost distributorship of Land Rover, they've lost distributorship of Jaguar. What is the future of this company?
Well, I think for CMC, they really have to re-strategize. They need to show the market that they do have the kind of leadership that is required in becoming a top car sales in the car market. So what we'd like to see probably is they need to put someone there who's going to exuberate a sense of leadership and a sense of strategic direction to investors. So probably the first step we're likely to see is maybe a change in management, overhauls, probably a new CEO who has a strategic vision where the company should be heading. So we definitely expect some shake-up.